G'day everyone, welcome back to Pete's Investing. Today's May 31st, 2023. This is the S&P 500 update. On our weekly indicator, we're still in a bullish trend, although the daily is broken up down to a neutral positioning due primarily to this divergence. So let's just quickly look at the weekly first off. So we make sure the moving average of the price chart are aligned with the moving average of the CCI 150. When they're aligned, it shows a bullish or a bearish signal. And if they don't align, it shows a neutral position like it was back during that period. So at the moment, primarily bullish signals only based on the weekly. Now, having said that, the daily is breaking down into a neutral positioning and may well break into a bearish signal soon. We've got here a divergence on the CCI, a bearish divergence versus a bullish divergence on the price chart. And it hit this resistance up here, and it's actually bounced. It broke slightly above it, but then it's bounced down again through that 42.10 resistance area. Now we're sticking my neck out here and going to say it's actually going to be a reversal here. We might see a bit of a downturn in the global markets. But for this to play out and work, we need to see the price break below this channel. And this is the divergence drawn according to this channel. The channel drawn according to the divergence. So if the price breaks below the channel, our initial target area will be this 38% at 40.65 to the 50% level at 40.16, and that closely aligns with this descending diagonal trend line as well. So that's where we are at the moment. So I'll be if I was doing it, I'd be taking profits and waiting for a rebound to the upside before taking any further long positions, but at least wait for this to break to the upside and show a bullish signal in the medium term. So that's on the daily. On the hourly, I've got here a couple of back tests. This is a long programming back test, and the red one is a short programming back test. So again, as you can see, short positions, profitability on short positions are gained when the price declines, and profitability on long positions gains when a price rises. So each of these steps indicates the average down. We don't use stop losses. Every time you add contracts, it averages down. And to avoid that drawdown, in other words, you may have entered one position but you don't enter any more, you take the discipline and trade only with the direction of the weekly and a daily trend. So you see here more recently during that upswing, you would have taken long positions during the weekly uptrend and during the daily uptrend during that positioning, and that aligns with this profitability increase in that period. And more recently back here, you would have seen there were no long positions during that decline on the weekly. If I zoom out, again, there were scattered long positions, but again, they're very few and far between. So you would have risked going long only in those little areas, but again, that doesn't align with the weekly. So to be extra careful, avoid taking those long positions. They would have been primarily short positions during that period. And again, that's during that period there. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also look at other strategies. We do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.